This conference will now be recorded.
Hello everyone and welcome to today's training, and we're going to look at the Mutual of Omaha Critical Advantage Portfolio. And there are three components to this group of policies. The first one is critical illness coverage. Second one is cancer coverage, and the third is a standalone heart attack and stroke. So I'm going to go over just a couple of disclaimers. I'm not going to read them out. I'm going to just pause for a quick second. If you want to read them, you can pause this video and read them yourself. Okay, so getting into what they're offering now, this right now, from what I understand, is the fastest growing segment of the Mutual of Omaha products. And the critical advantage portfolio consists of three benefits, three products. The first one is their critical illness, and their critical illness is available for people between the ages of 18 to 64 for lifetime coverage, or ages 18 to 54 for term coverage of 10, 15, 20, or 30 years. It's sold in increments of 1,000 units between $10,000 and $100,000, and it's a lump sum payment in the event that there's a trigger. And also the product has a return of premium upon death. And what that means is that if the person owns the product and they pay for it, they never use it, and they pass away, all of the premiums they paid will go to their beneficiaries upon death. Huge, huge, huge selling point. The triggers are 100% for internal cancer, heart attack, stroke, Alzheimer's disease, blindness, deafness, kidney failure, major organ transplant, and paralysis. 25% benefit for coronary artery bypass and coronary angioplasty. It comes with two optional riders. One is for the intensive care unit if they're confined to the intensive care per diem. And then the other rider is a cash value rider. You'll have some customers or clients that want something more out of their insurance policies, and to add a cash value rider to their policy, and we'll look at what that looks like in just a bit. But to add a cash value rider to their policy is instrumental, because at any given time, if they decide that they want to terminate the coverage, they will actually get something out of it, i.e. the cash value. Express issue between $10,000 and $50,000. This is huge. Express issue means no MIB or prescription drug check. Application questions must be answered no, and they will do random personal health interviews. Simplified issue is $51,000 to $100,000. And simplified issue means that they will do an MIB and a prescription drug check. There most positively will be a phone interview, and then of course the app questions must be no. For clients that are a bit older, over the age of 65, or for clients that specifically have a concern for cancer and may not qualify for the critical illness based on some of the medical questions, you can sell them cancer only. And the ages for cancer are 18 to 89, same benefits, 10,000 to 100,000 lump sum payment. And then it pays 100% for carcinoma in situ, internal cancer, or malignant melanoma. You can add the optional riders, intensive care unit, cash value, or you can include just heart attack and stroke, again, for your older clients over the age of 65, and or your clients that necessarily would not qualify for the critical illness portion, but would qualify for the cancer, heart attack, and stroke. Heart attack and stroke is a standalone, looks exactly the same like cancer. The only difference, of course, is how they pay it out. and they'll pay it out 100% as a result of a heart attack or stroke, and then 25% if it's as a result of a coronary artery bypass, coronary angioplasty. For those of you that don't know what those are, if you're in the insurance industry and you don't, it's probably a good idea to look them up. So really, who is going to be the target market for critical illness? First and foremost, if you're working in the Medicare market and you're working turning age 65, anybody aging into Medicare ultimately is going to be the target market. Reason being, number one reason being is it's offered up until age 64. Okay, so that's 64 years old and 364 days in a non-leap year can purchase the critical illness product with the return of premium upon death. Huge selling point in the Medicare community when you're talking about this type of coverage to your clients. The next kind of person would be anyone with a high deductible health plan. Also people with Medicare Advantage plans. They tend to have co-pays, maximum out of pockets. Very, very good for people in that industry. People with a history of cancer or heart issues in their family. I can tell you that through the years of trying to sell these products, one of the objections we get with cancer is when they tell us that no one in their family has ever been diagnosed with cancer. So yes, cancer is hereditary. There are some strands of cancer that people get, like breast cancer, that is a hereditary thing. But it doesn't necessarily mean because nobody in your family ever got it that you're immune from it. You know, maybe your risk is a little bit lower, but you're certainly not immune. Last I checked, cancer doesn't come around and knock on doors and choose who gets it. It's a very random thing unless your lifestyle. Anyone who would suffer financially as a result of a critical illness, and when you really think about it, it's pretty much anybody for that matter, anybody that would be in a situation where in the event that there was a critical illness in their family, there would be a catastrophic loss of income or financial resources, you know, because of that. You know, definitely if you're working the under 65 market or if you're in the Medicare Advantage market with people with very limited resources, they can be in a very destitute situation as a result of that. Anybody who's apprehensive to pay for insurance products, it's got that unique feature, the return of premium at death and the cash value rider. Very, very unique situation. Households that have one income earner, big deal here. So single moms and single dads out there, or moms and dads where one's staying home and the other one's out there working. And that one income earner gets sick, they suffer from a critical illness. It could have a major, major financial impact on their household. Households that are dependent on two incomes, a lot of times in order to keep the house going, both mom and dad have to both work. Both incomes are dependent upon their situation. And then parents raising children. When parents are raising small children, those small children have to be looked after. They have to be taken to and from school. They have to be cared for. They have to be fed. If one of the parents has suffered from a critical illness and it causes the other parent to have to care, it could put a lot of strain on the family and affect the resources tremendously. These types of issues not only affect the individual, but it affects the whole family. Who is the target market for cancer by itself and or heart attack and stroke coverage? And the target market for this person is anyone with a high deductible health insurance plan, small business owners, Medicare supplement owners. Experimental treatment is typically not covered by Medicare. The coverage, the benefit, can be used for any expense. All Medicare beneficiaries, non-infusion chemotherapy treatment, which is typically taking a pill instead, can be extremely costly to even those with adequate health coverage. The benefits, the coverage can be used for any expense. Younger people who are price sensitive because premiums are extremely affordable. And then anyone who wants to have the freedom to seek care outside their health plan's network should a cancer diagnosis occur. And I say it like this because there are several well-known cancer centers around the country, such as the Mayo Clinic, you have the Sloan Kettering, you have Stanford University. These are very, very well-known cancer centers. And if you're dealt some horrifying news and you're in stage 4, and one of these cancer centers have an experimental treatment going for your specific stage 4, you're going to want to consult with them. And if they're not in your health plan's network, the only way you're going to be able to consult with them is if you're writing a check. And if there's not enough money in that checkbook, that checking account to write that check, that's where this type of insurance comes into play. To give somebody a capital infusion of $20 or $25 or $30,000 so that they can go up to Sloan Kettering in New York City and have a consultation about a treatment that's working really well that their health plan will pay for, could save their lives. It's tremendous value that you can bring to your clients. Tremendous value. Now, why should you offer critical illness, cancer, or heart attack or stroke insurance? First and foremost, according to AARP, and I'm not endorsed to say this, I literally found an article on the internet, and it talked about the top reasons that people go in the hospital, and strokes are one of the most common reasons of hospitalization. Number 2, the entire family is affected when a family member suffers from a critical illness, heart attack, or stroke, or is diagnosed with cancer. Outside expenses and unforeseen expenses begin to add up. It is not cheap. It's expensive. It's not just the medical cost. It's everything else that goes behind it. Everything from the traveling to the people that are seeing you that have to eat, to maybe bringing in your kids in from out of town, to hiring babysitters to watch the kids, to possibly hiring a cleaning service to clean your house. There are so many things that people don't think about that come up when one member of the family is catastrophically ill. The financial freedom, just as I said before, to seek out top doctors around the country for a second or a third opinion. And think about it. Anytime you can think a critical illness diagnosis would be a financial catastrophe to anyone, that's exactly the reason you should be offering this product. Every single agent should offer this product to every single one of their clients and let their clients decide whether or not they feel that there's value and they need to have the product. Just to kind of recap a little bit, what are the product features? And we'll go through some of those features now. But first and foremost, there is no MIB check or RX check on all applications up to $50,000. It's based on a yes/no response on the medical questions. And if we take a look over here, and I just deleted it by accident, but the medical questions are very easy. For the critical illness, there's going to be a total of 8 questions on the app. And here's the app right here. So the critical illness questions reads off whether or not the person has HIV or AIDS. In the last 10 years, have they been diagnosed for cancer? In the past 3 years, have they been told that they had a cancer test and cancer hasn't been ruled out or it's abnormal? On the heart attack and stroke questionnaire, the past 10 years, have they been diagnosed with a major heart issue other than high blood pressure? In the past 3 years, have they received any testing that's been inconclusive or unfounded regarding their heart? And then the diabetes question, if the person is type 1, type 2, under the age of 30, A1C greater than 7 in the last 12 months, or diabetes with tobacco would be a knockout. So somebody that's diabetic, just taking a sugar pill, and they're not a smoker, they would be okay. And then section 4 talks about the other questions, kidney functions, Alzheimer's, hepatitis, Parkinson's, multiple sclerosis, muscular dystrophy, organ transplant, pulmonary fibrosis, severe lung disease. These instances here, these particular things, if you have any of these, chances are you're not going to get the critical illness. And then finally, if there's anything pending, or in the last 3 years, if they received any abnormal tests. If you're just doing the cancer, you would just have to answer right here, section 3. I'm sorry, section 2, cancer section 2, and then cancer section 1. Yeah, everybody's got to answer section 1, cancer section 2, heart attack and stroke is just section 3, and then critical illness is all the sections. Okay, this should be an S. Okay, so cancer is section 2, heart attack and stroke is section 3 only, and critical illness is all the sections. Okay, section 1, 2, 3, and 4. So the other feature is the return of premium upon death for the critical illness product for people between the ages of 18 to 64 when you select the lifetime benefit. The cash rider is available, and if you take a look here down below, the cash value rider looks like this, and it does vary by state, so you have to check the state that you're in. Okay, it differs by ages and percentages by state. But if you take a look here for this particular example, if they had the product for 20 years and they decided they wanted to cash it in, they would receive 68% of their accumulated cash value at that period of time. If they held the product for 25 years, they would receive 100% back of their cash value. And it just speaks to a little bit about that the percentage payable is based upon the number of full years the rider was in force. The percentage amount ranges from 3% in the 6th year to 100% in the 25th year. Okay, so definitely something to keep in mind. The other thing about this product too is they do abide by a height and weight chart, and this will all be posted in the group. But if you take a look here, the height and weight chart is a very liberal. I'm 5'11", so my weight range would have to be between 129 and 280. I happen to be within the guidelines of my height, standard normal weight. So I would have to be 100 and so odd more pounds in order for me to be a decline for the product. So it's very, very liberal height and weight chart for the product. More highlights, simple yes/no application questions, which we just went through. As I said before, express issue $10,000 for any of the products. And then simplified issue up to $100,000. Extremely competitive rates. It's guaranteed renewable. Dependent children are covered up until age 25 or until the date of marriage. There's a 10-year look back for cancer and a 10-year look back for heart attack and stroke.
This conference will now be recorded.
Now we're going to look at how to run a quote. Here's the website, https://www.mutualofomaha.com/mobile quotes. I'm going to pull it up in just a second. You want to select critical advantage. You want to indicate what type of coverage. They're state-specific unisex rates, so it depends on the state that you quote in. And then the other tidbit you want to look at, and this is although not the rule, it's just a guideline. Anytime you're quoting the family, when they include children, all right, so 2 adults and children, sometimes it's better for the consumer to run separate quotes if there are no children included on the policy. So if you're quoting 2 adults and children, you're going to want to do um, uh, family. If you're quoting 2 adults with no children, you want to look at both family and non-family. So when you get to the Mutual of Omaha mobile quote thing, you go right to Critical Advantage. You have access to all the Mutual of Omaha products to quote. I just blacked out all the other ones. I just wanted to see Critical Advantage. And then when I run the quote really quick, let's do the state of Florida, which is the state I live in and my age. Okay. And if I do critical illness only, because you can do critical illness, heart attack, and stroke, and I run the quote for the maximum that I can do without extra underwriting, and I hit calculate, my rate comes up as $89. So for me to have critical illness, $50,000 is $89 a month. Now, if I wanted to include my family, and I put my family in there, and I calculate it, now it comes up to $169.79. So individual for me was 89. If I include my wife and child, it bumps me up to 169.79. Again, remember, return of premium for the product. Let's assume that I did not want critical illness. I just wanted to have cancer coverage. Okay, that was my big concern, was cancer. I have the choice to do a term period or lifetime. Okay. I have a choice to add riders, heart attack and stroke rider, intensive care unit rider, and cash value rider. We'll look at those in just a second. And I hit calculate, and cancer only for me is $35.42 a month. It's not a whole lot of money to get $50,000. God forbid I'm diagnosed. If I wanted to add the intensive care unit rider, I have some choices: 250, 500, 750 per day of intensive care admission. And let's just go with the max here. It raises the premium by just a few dollars each month. Okay, not too much. I think it was about $80 for the year. $1,000 a day if I'm admitted into intensive care. And let's look at the cash value rider. Let's go back. Just for the cancer is $35.42. If I include the cash value rider, it jumps up to $62.74. So more money you're paying into, but the money goes towards cash value. And then if I hold it for 25 years, I get my cash value back. Or if I cancel it along the way, I get a percentage of it back. If I wanted to add the heart attack and stroke rider, I don't have to do the full amount. Let's just say I just wanted to do $10,000 of that coverage. And it just raises the premium in this example just a little bit more. So if you got a client that wants to put on $50,000 of cancer, it's really, in this example, it's really just a few dollars more to give them the heart attack and stroke. I would highly encourage you to consider doing that. Okay, it's not a huge amount. You have an individual that wants to do $20,000 in cancer. The cost here is $13 a month. Just to do $10,000 in heart attack and stroke brings it up to 20. It's $7 more. Okay, it's not going to break the bank of anybody. Nobody's bank is going to be broken for $7 a month. Let's take a look at when we do 2 individuals separately and together. So let's look at critical illness for $10,000, same 43-year-old person. Okay, and we want to calculate that person's rate, so that's $17. So I'm going to write that in there, $17. And we're doing a husband and a wife with no children. Okay, now we're going to take the wife, who's a little bit younger. Everybody's haven't picked up on it. I married a younger woman, and her rate is $8.92. Okay, so $8.92. So we add these two together, $15.92 for 2 separate policies for a husband and a wife for $10,000. Now, If we do the family, let's assume we don't have a child. We just want to look at the family, putting them together. Okay, 43 and 33. $10,000 lifetime critical illness. The rate is 33.16. So I've obviously did some math wrong here. Let me redo the math. Critical illness, there are 43 and 33 is 33.16 per month. So let me put that up here. 33.16. Okay. So that's family, critical illness. And then let's take the individual. 43, 10,000 critical illness is 17. Okay. And then the 33-year-old, 10,000 is 892. All right. 892. So my theory is correct. I was right. 2592. So if we do the policies separate, our premiums for the same $10,000 would be $25.92. But if we do the policy as a family, and again, in my example, we're doing a husband and wife with no children. If we do the policy as a family, it comes out to $7 more. It would be advantageous for you to do two separate policies in my example. So I was correct the first time. So that's how you run quotes. I would say if you're working the Medicare market and you're dealing with people over the age of 65, you really want to just stick with cancer, heart attack, and stroke. So $10,000 for somebody that's 75 years old for cancer coverage is $23 a month. It is not a lot of money. Okay. When you think about it, most Medicare Advantage plans have a risk, and that's a risk of a maximum out of pocket, typically about $6,700. I see a lot on the PPO plans. So to do 2 years of a maximum out of pocket for $35 a month is not a bad deal to somebody that's in a Medicare Advantage plan. Highly, highly recommended for that. So that's how you run a quote. I find it to be pretty easy. You can download this on your mobile device. Now I'm going to talk about how to apply. So there's different ways to apply for coverage. The first way is you can apply in person or you can apply remotely. Remotely means you and the applicant are in separate locations, whether in the same city or whether across from each other in the country. If you're going to do an in-person application, it must be done electronically or with a paper app. So you can either do electronic application or with a paper app. If you do it electronically, they must have an email address. And if they don't have an email address, then you have to do a paper application. If you're doing it remotely, which is typically telephonically over the phone, you can do an electronic app via email, or you can do a voice signature. The voice signature, you must be approved in advance by Mutual of Omaha for voice signature, and you must have the ability to store recordings on a HIPAA-compliant storage platform. You must be able to provide on-demand any and all recordings. The voice signature option is reserved for call centers or higher producing agencies where their agents are typically on site. Remember, $50,000 or below, there's no MIB or RX checks, express issue. Policy number will be made available on the portal the same day or the next day, and then the draft will occur almost immediately, typically 1 to 2 business days upon issue. So I'll quickly show everybody how to apply. You log into your Mutual of Omaha portal, okay? You go over to where it says electronic application. You scroll down all the way to critical illness application. You click Start eApp. And the eApp comes up. And I'm not going to go any further than this because at this point it becomes proprietary information. And although Mutual of Omaha has approved this training, um, uh, we did not discuss us viewing or showing their proprietary information. That's only reserved for agents that are contracted with them, because I'm going to make this video public. So you would basically click Start Application. If you've never done an application before, it's pretty self-explanatory. It just kind of walks you through what you need to do, but you need the person's information, their social security number. If you're doing an application through us, make sure that you use commission code 5D. 5D is in David. Very, very important. Commission code 5D. You may have different Mutual of Omaha contracts, and it's very, very important that you use commission code 5D. If you don't do commission code 5D, you will not get the special commission schedule that we have and groups like us have. So what are the next steps? If you are not contracted to offer Mutual of Omaha Critical Advantage portfolio products, please contact your upline, or you may contact us directly. Your upline will most likely be part of our downline if you're watching this video, and we will respectfully refer you back to your upline. So we will work with you, we will help you, we will set you up, we will answer all your questions, but in the end, we will positively respect the relationship that you have with your upline. If you are contracted already and you want to move over your critical illness line, please contact us so we can assist. You are welcome to move all of your Mutual of Omaha lines, but if you want to keep your existing relationship, you can just move over the critical illness product only. And we offer a heaped contract, which is very unique, and that means that you will get more first-year commission, which will truly help you with cash flow each time you sell the product. I can tell you this, it is the top, if not the highest street level comp out there on a critical illness product such as this type, with such an easy application and a very easy placement. So folks, get out there, sell, 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 whatever you need. Make sure first and foremost you're doing the right thing by your clients, and you will have a wonderful, fruitful career, if not already.